Convener of NAGAR KESHAV CP Study Circle. Welcome all the participants in today's seminar. Today we are going to discuss a very important topic on transfer pricing. This will be taken up by Shweta Garg. I welcome the speaker in our seminar. The topic assigned to her is impact of COVID on transfer pricing benchmarking. Now I invite the speaker to start the deliberation, please. It is over to Shweta Garg.
Thank you, Bhardwaj. First of all, sincere thanks to R.K. Gupta sir and Bhardwaj for inviting me to this study circle and making me the part of it. And I would really try to do the justice to the subject. And Gupta sir, can you please confirm my voice is okay? या मैं fan बंद करूँ?
No, it's okay. It's okay.
Thank you. So luckily the government has extended the date, and that was much required. First of all, considering the income tax portal glitches, and I am primarily a transfer pricing professional, so for us it was like a much required thing, because transfer pricing, the elixir of transfer pricing, the basis of whole transfer pricing exercise primarily lies on comparables. And at this point of time, due to COVID, the data for companies has not been updated in the databases as of now. And like for the listed companies, it must have been available, but for private companies, the data was still not available. So we really are thankful कि date बढ़ गई है. और during this delegation, you would also appreciate कि जो comparabilities हैं that are primarily based on comparables, वो कितना important place है उसका transfer pricing में. और अगर वो data हमारे पास available now, and especially for the year that is under review now, that is financial year 2021, because 2021 के जो economic circumstances हैं that are very much different from the past year. So otherwise in practicality, many a times we use the data for the past year and conduct our transfer pricing exercise, but that cannot be done for the financial year 2021, because the market, the industry, the businesses have been impacted very differently than the past years. So it is very necessary for us to have the data for financial year 2021 to have the proper transfer pricing analysis. And I think keeping that only in mind, government has extended the date, because that is a practical problem, and now it has been extended to 3 months later, and then we can have the proper data to have the proper transfer pricing exercise. And the topic, that is impact of COVID-19 on transfer price in India, I would say involves a lot of practicality in this. Like the law is not so required to be analyzed in this topic than the practical aspect. As such, also transfer pricing is more of a practical and a judgmental exercise, and the law that defines it is not so important as the guidelines that has been formed to describe the exercise that should be conducted for it. So you would better be able to appreciate it when we will go further. And that's why I would say that there is no standard answer, or there is no clear-cut answer to this topic, that what would be the impact of COVID-19, and because it involves a lot of a business sense, and it will all depend on the nature of business, the industry in which business is operating, the product in which the business is operating, and other things that impact the business. And the solution to this would also be based on the business that we are analyzing, and it will depend on the facts and circumstances. So the answer is not clear cut, but what I have tried to highlight are the issues that can be there because of COVID-19, and what should be the approach to deal with those issues. I won't say that I would give the straight answer, I would give the thumb rule. That won't be possible, but I can provide the approach, that how we should approach the transfer pricing exercise for this year. So with this, I would begin. And first of all, since my understanding is that many of you might not be having a practical experience of transfer pricing, so just to be on the same page and to understand the intricacies of it, let's just have a quick overview of the law that determines the transfer pricing in India. So basically, transfer pricing in India is governed by very few sections and very few rules out of the Total Income Tax Act. That is section 92 to section 92 of the Act. They govern the transfer pricing as well as transfer pricing report that we can say as local file as well as master file, plus section 286 that governs the country by country reporting. So since these all three are part of transfer pricing documentation, that are local file, master file and country by country reporting, laws that are applicable for these three tier documentations that India is now following. And corresponding to these sections, there are rules that are Rule 10A to Rule 10F that gives the broad framework that for the guidelines that should be applied, for the methods that can be applied to conduct the transfer pricing exercise. So let's just have a quick overview of these sections. And first of all, yeah, before that, I would also like to state that there has been no change in these sections or in the rules. The only thing is that the due date for filing of Form 3CEB, for filing of Form of Master File, that is Form 3CEAA and 3CEAB, and filing of form for CBCR, that are 3CEAD and 3CEAE, has been extended. That is the only change in the law, and otherwise there has been no change due to COVID under these laws. So how these impact of COVID is going to be incorporated in the law, that we would see. So section 92 is the main section of the which says that every transaction that has been entered between two associated enterprises, then if it is an international transaction, then the arm's length price for that transaction needs to be determined. So that is the main section that puts in the responsibility of determination of arm's length price if there is an international transaction between two associated enterprises. Then next section is 92A. 92A defines what is associated enterprises. So broadly it says that if two enterprises are having a common control or having a common shareholding or having a common management, then they would be considered as associated enterprises. And to further clarify that, section 92A gives the list of these certain situations where one enterprise would become the associated enterprise of another. And broadly, those involve that if one enterprise has more than 26% of shareholding in another enterprise, or if two enterprises are held by the same entity and the shareholding is more than 26% of that same holding in both the enterprises, then those both enterprises would also become AE. Then there is also the criteria that if one entity is giving the guarantee to another entity in respect of the loan that constitutes more than 10% of your assets, then that would also form AE. So there is a whole list of under section 92A that gives the detailed guidelines on formation of associated enterprise. Then another section is 92B that defines international transaction, that what all transactions would be covered under the scope of transfer pricing. And broadly you can say that each and every type of transaction has been included in it, whether it's sale, purchase, guarantee, borrowings, issue of shares, everything has been brought in that net. So section 92B is very wide. Then after 92B, it's 92C, and 92C prescribes 5 methods through which the arm's length price could be determined. So under the law, we have only those 5 methods to determine the arm's length price, and there is no other method that can be used by the assessee other than those 5 methods for the determination of arm's length price. And those 5 methods are, first is comparable uncontrolled price method, that is CUP, and then resale price method, RPM, cost plus method, CPM, and transactional net margin method, TNMM, and profit split method, PSM, and other method. So these are the methods, and you can determine arm's length price through these methods only. Then after 92C, it's 92D that prescribes to maintain the certain documents. And maintenance of documents is also one important aspect under the transfer pricing, and importance of it can never be undermined. And during the COVID times, there has been no change in the law as such in section 92D or the corresponding rule 10C, not 10C, 10D, that prescribes that what documentation and information should be maintained. But there has been no law, but the way the rules or the section has been drafted, it automatically brings into net that all the impact of COVID needs to be documented under these 2 sections. And why is it important, that we would see further also. Then 92E says that every person who has entered into the international transaction needs to file the form 3CEB, and the due date for filing form 3CEB for financial year 2021 has now been extended to 15th February 2021. 15th February. It's 30th Jan. It's 15th February 2021, I think, or it's 30th January. I will just check that, sorry. And after 92E, it's 92F that gives the definition of certain terms for these sections. So this is the broad framework of sections and rules. Now, as I said, that section 92C prescribed 5 methods for the determination of arm's length price.
Shweta ji, I hope you are not moving your screen. You are on the first screen itself. I just wanted to confirm.
Sorry Gupta ji, क्या कह रहे हैं आप?
मैं कह रहा हूँ कि आप अपनी स्लाइड मूव तो नहीं कर रहे ना? You are on the first slide.
अभी मैं फर्स्ट स्लाइड पर ही हूँ. No, I am not moving.
Okay. I just wanted to confirm. Thank you.
Yeah, thank you. Okay. Yeah, so I was explaining that this is the broad law, and 92C prescribed that what are the methods through which the transfer pricing exercise could be conducted, the arm's length price could be determined. And the corresponding rule that gives the guidelines for the application of those rules is the rule 10B. So 10B gives that how these methods should be applied, and this is very important to understand because every method has certain scientific calculations involved in it, and based on that those methods have been prepared. So I will just explain those because that would help to understand that how the COVID is going to impact the application of those methods. First of all, the method is CUP, that is comparable uncontrolled price method. So this method simply prescribes that the price at which the non-related party has entered into an uncontrolled transaction should be compared with the price at which taxpayer has entered into a transaction with the associated enterprises. And here, since the price comparability is involved, कि टैक्सपेयर ने अपनी एई के साथ किस प्राइस पे एंटर करा और एक अनकंट्रोल्ड ट्रांजैक्शन में नॉन रिलेटेड पार्टी के साथ या तो उसी टैक्सपेयर ने या किसी और ने किस प्राइस पे एंटर करा. तो कप मेथड के अंदर इट इज वेरी इंपॉर्टेंट कि जो चीज आप कंपेयर कर रहे हो वो दैट हैज टू बी वेरी सिमिलर. Like you cannot compare an apple with an orange. You have to compare an apple with an apple. That is the main requirement for applying the cup method. And also it is also important कि जब आप cup method लगा रहे हैं तो there should be the same timing. Like you cannot compare the transaction of April with July. It should be on the same time broadly. And also the also the industry in which you are applying it should be same. Like let's say one taxpayer is selling a good in Singapore and another taxpayer is selling a good to, let's say, America. So in this case, the cup method cannot be applied because there has to be similarity in all aspects. So this is broadly what the cup method is. Now under COVID times, I would say that this method becomes more important to apply than all other methods because this is a straight method. और इसके अंदर जो हम कंपैरिजन करते हैं वो बिल्कुल सेम ट्रांजैक्शन का, सेम टाइमिंग्स का, सेम ज्योग्राफिकल लोकेशन का करते हैं. तो अगर कोई एक चीज इम्पैक्ट हुई है, अगर एक ट्रांजैक्शन इम्पैक्ट हुई है कोविड से और आप उसे कंपेयर कर रहे हो बिल्कुल एक सिमिलर ट्रांजैक्शन से एट द सेम टाइम, तो वो भी उसी, और प्रोडक्ट भी अगर बिल्कुल सेम है तो वो भी सिमिलर वे में ही कोविड से इम्पैक्ट हुई होगी. और इस केस में अगर हम कप मेथड लगाते हैं तो वी नीड टू मेक नॉट वेरी हाई एडजस्टमेंट्स, वी वुड जस्ट रिक्वायर टू मेक द एडजस्टमेंट्स कि अगर कुछ टर्म्स में फर्क है कि लेट्स से एक जना एफओपी पे सेल कर रहा है एंड अनदर वन इज सेलिंग ऑन सीआईएफ बेसिस, तो बस उन दोनों के बीच का जो डिफरेंस है that adjustment we can make. But otherwise in COVID times, if we apply this method, then that would give a very certainable results. Then next method is resale price method or RPM. So RPM basically what it does is it compares the gross margin that are earned in an international transaction and in an uncontrolled transaction. और ग्रॉस मार्जिन जो अर्न होता है उसकी कंपैरेबिलिटी जब हम करते हैं देन वी कैन डिटरमिन कि जो ग्रॉस मार्जिन जिस टैक्सपेयर को हम एनालाइज कर रहे हैं उसका ग्रॉस मार्जिन क्या अनकंट्रोल्ड ट्रांजैक्शन के या अनकंट्रोल्ड पार्टी के जो ग्रॉस मार्जिन है उसके इक्वल है या ज्यादा है, तो वेदर इट इज एन आर्म्स लेंथ और नॉट. अब यहाँ पे वन पिक्यूलियर थिंग इज कि जो ग्रॉस मार्जिन्स होते हैं दे आर बेस्ड ऑन द फंक्शंस दैट आर परफॉर्म्ड बाय एनी एंटिटी. Gross margin gets very directly affected by the down the line functions that are performed by the taxpayer. Like I say ki if there is one person who is selling some product in Karol Bagh market, having a small shop in or in Karol Bagh market, yeah, and there is another taxpayer who is selling the same good in, let's say, Ambience Mall or a Promenade Mall. So the product is same and they might even be purchasing from the same place, but still their gross margin would differ because there is difference in their functions. Like one is operating from a very small shop in a local market and one is operating from a multi-mall. So in gross margin, the prime requirement is that when you are comparing your transaction with some uncontrolled transaction, then that uncontrolled transaction and the transaction under comparison should, the taxpayer and uncontrolled transaction should have a same functionality, otherwise gross margins could be affected. Now in COVID times, how this method will have the implications is it may be possible कि एक जो टैक्सपेयर है उसकी कॉस्ट इज इंक्रीजिंग बिकॉज ऑफ डिस्रप्शन इन सप्लाई. लाइक इन कोविड वी हैव सीन दैट there has been a major lockdown and due to which there was not a frequent and smooth supply of the goods to the people, and in fact many shopkeepers have also closed down. So uske karan there could be impact on the gross margin. So that impact on the gross margin we need to determine and we need to ascertain for each business कि ऐसा क्यों हुआ. इट मे बी पॉसिबल कि एक की कॉस्ट जो लॉजिस्टिक कॉस्ट है वो इंक्रीज हो रही है तब भी उसका मार्जिन ज्यादा आ रहा है, और जिसके साथ आप कंपेयर कर रहे हैं उसकी लॉजिस्टिक कॉस्ट भी इंक्रीज हो रही है लेकिन उसका मार्जिन जो है कम आ रहा है. सो व्हाट कुड पॉसिबली बी द रीजन फॉर दिस? सो दैट नीड्स टू बी असर्टेन. एंड पॉसिबल रीजन इसका ये भी हो सकता है कि जिसकी whether in what kind of products are they dealing. Like if I say कि in RPM not so much of product similarity is required, so if one person is selling the breads and another one is selling the cakes, so in RPM you can say that both are in bakery items and their functionality is, considering their functionality is same, that both are operating from a normal shop. तो इस केस में ऐसा पॉसिबल है कि इनके ग्रॉस मार्जिन्स में डिफरेंस आ रहा हो ड्यूरिंग कोविड टाइम्स, क्योंकि वी कैन से कि जो ब्रेड का अगर कॉस्ट लॉजिस्टिक्स इंक्रीज हो रही है तो जो सेलर है वो उस कॉस्ट को पास ऑन कर पा रहा है फर्दर कंज्यूमर को, और जब वो कॉस्ट को पास ऑन कर पा रहा है तो वो अपनी प्राइस इंक्रीज कर पा रहा है कंज्यूमर को सेल करने के लिए, और इसलिए उसके ग्रॉस मार्जिन जो है वो इफेक्ट नहीं हुए कोविड के कारण। वाइल जो केक वाला रीसेलर है जिससे आप कंपेयर कर रहे हैं, उसने इनमें से कि जो केक्स है उसकी डिमांड इतनी है ही नहीं, इन कोविड टाइम्स नोबडी इज परचेजिंग द केक्स, और इसके कारण I am not able to pass on the cost to the consumer, or I have to bear the cost, and that's why my gross margins have reduced. So these kind of scenarios need to be, these kind of effect on gross margin needs to be evaluated and documented, and if required adjustments need to be made so that we can determine the actual scenario. और we may say कि इस केस में हम bread seller और cake seller को compare ही नहीं करेंगे, या we will make the adjustments. Similarly, there is a cost plus method, and cost plus method, the difference between cost plus method and RPM is just that cost plus method कॉस्ट के ऊपर जो मार्जिन अर्न करा है उसको कंपेयर करते हैं, और आरपीएम मेथड सेल के ऊपर जो मार्जिन अर्न करा है उसको कंपेयर करते हैं। एंड देन अनदर मेथड इज ट्रांजैक्शनल नेट मार्जिन मेथड, उसके अंदर जो नेट प्रॉफिटेबिलिटी होती है, नेट प्रॉफिटेबिलिटी कंपेयर होती है, एंड लाइक ग्रॉस मार्जिन्स कैन बी इफेक्टेड बाय द डाउन द लाइन फंक्शंस, but the net margins are not affected by down the line functions, and ultimately जो net margin हमारा निकलता है that based on an industry would more or less be similar if the products are operating in broadly the same industry. So this is, yeah, so this is broadly how the transactional net margin method or TNMM is applied. Now practically in TNMM, while doing the benchmarking, we compare the net profit, basically the operating profit of the taxpayer that is under review, with the operating profit of the comparables that are operating in the same industry. And in the normal circumstances, the broad comparability was done. Like it was assumed कि okay, if a person is selling a toaster, or if a person is selling like let's say a hand blender, electronic goods, so since both are performing the same functions, we can compare them as they are operating in the same industry. But in COVID times, this needs to be revisited and re-evaluated. Like last year हो सकता है आपने कुछ comparable select करे by considering them as operating in the same industry, but this time for the year 2021 that can have impact even if they are operating on the same industry. Like it may be possible कि one person is making, let's say one person is doing the catering services, and one, in the normal circumstances we would have ascertained that margin of the caterer that is providing services to the airplane industry would have been similar to the caterer who is providing services to, let's say, offices or canteens to the offices. But now in COVID times, we need to ascertain the consumers also for which the comparable is serving. Like airline industry has been totally shut down, so the caterer who is serving to airline industry would of course be deeply impacted as compared to the caterer who is serving, although offices are also closed, but still offices are still better than the airline industry, so that would not be so much impacted as the another caterer. So these things need to be revisited under the transactional net margin method, and also it also needs to be ascertained that if there are any factors that may affect the net profitability due to COVID, and if there are so factors like due to COVID, there could have been some additional cost that needs to be incurred by the businesses. So if those additional cost has been incurred, then how to treat that additional cost, and whether it is a general trend in the industry to have those costs. So these kind of things we would discuss, that what are those factors that could impact, and what we should, how we should determine them, and what we should do in those cases. So after giving, I have discussed broadly the three methods, and then profit split method and other method are also there. So profit split method basically involves its application when two parties are operating in such a way that it cannot be ascertained कि किसका क्या function है और किसका क्या function है. Both parties are working interlinked together. तो उस केस में profits को आपस में हम divide कर देते हैं. So in such a case, PSM के केस में, let's say COVID has impacted the one party, but it has not impacted the another party. So now in this case, who would bear the impact of the COVID? Whether the party whose business has been impacted, that would bear, or whether it would be, since it's a joint it's a joint project, both the parties should bear the impact of the risk that has arisen due to COVID. So all these things needs to be determined. And then other method is finally the method that does not involve the real transaction. It provides that if there is any data available even in the public database, or even in the public domain, or like in media, or for example in case of commodities, there are exchanges, and for that the prices are available on daily basis. So all that data where there is not actual transaction, but there is data that is available publicly, that can be used to benchmark the transaction. If you have a if your business is under that, if your business have the prices that are under those databases, like commodities ke case mein, if the person is involved in trading of commodities, then the prices of the NCDX or some other exchange that shows those prices can be used by those traders under the other method. So other method would, I say, under COVID times would be very useful, because it needs to be analyzed from the public database कि जिस industry में taxpayer operate हो रहे हैं, how it has been affected. So we need to document through the reports that are available in market कि एक auto industry है, auto industry पे क्या impact पड़ा है, because of lockdowns there has been dip in sales. So that reports can be obtained from magazines or from any publicly available information. So in that way, other method could be very useful in the COVID times. So after having the glimpse of all these methods, I would say that this is the law, and now the mechanism in which these methods are applied, and the mechanism through which comparables are selected for application of these methods, and those are very flexible. And those are flexible not only in India, but globally. The mechanism of carrying out benchmarking exercise is very flexible and subjective also, because there are no strict rules to it. It requires a lot of business sense, commercial sense, and there are guidelines on this. Like there is a guideline of OECD that has given the detailed instructions and detailed recommendations on application of methods and adjustments. So those can, from those guidelines, it can be drawn, and from judicial pronouncements also we can determine that how we should select the comparable, and in case there is a difference between the transaction that we are benchmarking and the comparable transaction, then how those differences could be adjusted, and when there is a fall in the industry, then what we need to do. But still these guidelines and judicial pronouncements are not giving any straight answer or standard answers. but still we need to exercise lot of judgment. And here is the scope, like we cannot change the law, but this is the area where the impact of COVID could be taken care of while doing the benchmarking exercise, because this mechanism is very flexible. And for this we need lot of data to be collected, lot of analyzation to be done, and on top of it we need to document it, because ultimately when we need to prove it to the tax officer after 2 or 3 years, it would be the documentation that would prove our point, that will substantiate our losses, or that would substantiate the dip in the margins. And this can even be appreciated from the rules that had been given for the application of the methods. Like under Rule 10, Sub-Rule 1 and Clause B that prescribe the mechanism for application of RPM, it says that such resale price means, first of all, it says that you need to determine the resale price that has been taken by the taxpayer, and then that resale price is reduced by the amount of normal gross profit margin accruing to the enterprise or to an unrelated enterprise. So first of all, here comes the subjectivity, that how to determine the margin of the unrelated enterprise. Like in law, there is no prescribed method that how would you determine the gross profit margin of unrelated enterprise, but that is a one parallel aspect going with the law, that there are databases through which the search is conducted and through which the data of the unrelated parties are extracted and gross margins are determined. But how that search would be conducted and what would be the comparables, how those comparables would be extracted, that all is a practical aspect for which you can get the guidelines in judicial pronouncement, but lot of flexibility is still there. And it just says, the rule just says that the gross profit margin should be compared with the gross profit margin of the unrelated enterprise. Now, what the unrelated enterprise would be, for that certain criteria had been laid out. Like Rule 10b2 says that for the purposes of Sub-Rule 1, the comparability of international transaction or specified domestic transaction with uncontrolled transaction shall be judged with reference to the following. So Rule 10b says that uncontrolled transaction, whether it is comparable, whether it should be considered as comparable uncontrolled transaction, it should be judged on the following criteria. Now, these criteria, like first is the specific characteristics of the property or services transferred, like कि the product in which you are dealing, उसका क्या characteristic है, या service जो आप provide कर रहे हो, उसका क्या characteristic है. वो जो characteristic है, उसके basis पे हम जो है वो comparable draw करेंगे कि it should be similar to the characteristics as you are comparing. Then secondly, कि functions क्या perform हो रहे हैं, what assets you are utilizing, or what risk the taxpayer is assuming. Considering those functions, those assets and risk, the comparable should be selected. The whole genesis of transfer pricing primarily lies on this, that what functions are performed, what assets are employed. Just to explain it better, I would give an example. Ki let's say there is one manufacturer and he is a contract manufacturer. So the functions that contract manufacturer is performing is that he is doing the manufacturing, and more than that he might be involved in little bit of distribution. और जो risk वो assume कर रहा होगा इससे related, वो he would primarily be bearing the risk of manufacturing only. कॉन्ट्रैक्ट मैन्युफैक्चर के ऊपर ये रिस्क नहीं है कि उसको मार्केट में सेल करना है, उसको प्राइस डिटरमिन करनी है, उसको मार्केट कैप्चर करना है, उसको क्रेडिट रिस्क नहीं है कि पैसे पार्टी से मिलेंगे नहीं मिलेंगे. So the contract manufacturer के जो functions हैं और जो risk हैं और जो वो asset employ करते हैं, उसके कारण we have named him as contract manufacturer. अब for benchmarking the transaction of contract manufacturer, we need to determine the comparable who should be doing the same functions, assuming the same risk, employing the similar assets. So it cannot be done कि contract manufacturer को हम एक license manufacturer के साथ compare कर देंगे, because license manufacturer is the one who is doing the selling part also, who is doing the marketing also, who is creating the market for its product. और अगर वो sell करते हैं unrelated parties को या related parties को, they have the credit risk कि पैसे मिलेंगे कि नहीं. So basically, based on the functions, assets and risk only, the characterization of a taxpayer is determined, and then the comparable is evaluated that it should also have a same function, assets and risk, or in short form it should have the same FAR. And then the third is contractual terms of the transaction, which lay down explicitly or implicitly how the responsibilities, risks and benefits are to be divided between the respective parties. So one other important aspect is contractual terms. So in clause B, we saw that we need to determine or delineate the FAR of a taxpayer, and then we need to see also the contractual terms, that whether that FAR is similar to the contracts that has been laid out. Like in contracts, it could be given that, okay, you will be remunerated based on the cost plus 15%. So if this is the contract, then we can say that the taxpayer is a captive service provider, or it is not bearing the major risk, और उसको अपनी cost के ऊपर fixed markup मिल रहा है. So comparable selection, maybe we should also select those comparables only. So contractual terms define those functions, assets and risk, but sometimes it may be possible that the actual conduct is different from the contractual terms. So OECD guidelines also prescribe in this that when the actual conduct is different in the contractual term, then the function, asset and risk of the taxpayer should be tried based on the conduct than the contractual terms. Let's say in contract it is written that foreign exchange risk would be borne by an Indian entity, while in actual we see that Indian entity is raising invoices in Indian currency to the another party. So in such a case, there is a difference between a contract and the actual conduct. So in that case, the actual conduct will take precedence over the contract. Then other thing is conditions prevailing in the market in which respective parties to the transaction operate. So this thing, that what is the industry, how is the condition in the industry, how your industry is responding in the year, that also needs to be ascertained for determining the comparables. And in determining this, the aspect has to be taken to geographical location, size of the market, the laws and government orders in force, cost of labor and capital. So these are the factors that are required for determining the comparability. And now the change that these all factors would be impacted by the Covet. So that is how the transfer pricing exercise is going to be changed. Like in clause D, it says that you have to take consideration of the market in which the respective parties to the transactions operate. So in case by the Covet, the certain market has been impacted, and if you are choosing a comparable who is operating in that market, so you need to document that we cannot consider it as a comparable since the market in which it is operating has been impacted by COVID adversely or positively. So that might have been selected as a comparable in past years, but now because of COVID, there is an impact on the market in which it is operating, or because of the laws of government. So because of those things, that the comparable might not be an appropriate comparable for the COVID year. So this is how the flexibility is given in the laws for the application or application of arm's length method or the selection of comparables, and in this flexibility only the impact of COVID needs to be ascertained, and we have to take a prudent call accordingly, because otherwise a comparable, because otherwise okay, the practical aspect here could be keep during the year the data for the comparables was not available, so how would you determine ki उस टाइम पे while entering into the international transaction हम क्या प्राइस उस टाइम पे डिटरमिन करें. सो ये एक बहुत ही प्रैक्टिकल प्रॉब्लम है कि जब हमें कंटेम्परेनियसली रियल टाइम में एक प्राइस डिटरमिन करनी है और डेटा कंपैरेबल्स का अवेलेबल नहीं है टिल द एंड ऑफ द ईयर, तो ईयर के बीच में ड्यूरिंग द ईयर 2021 हाउ कैन वी डिटरमिन कि उस टाइम पे जो कंपैरेबल्स थे उनका क्या मार्जिन चल रहा था, हाउ दे वर इफेक्टेड बाय द इंडस्ट्री एंड वेदर वी शुड कंसिडर देम एज कंपैरेबल और नॉट. तो इसके लिए वन प्रैक्टिकल थिंग इज दैट वी हैव द क्वार्टरली डेटा अवेलेबल. सो उस केस में हम क्वार्टरली डेटा यूज करके वी कैन फाइंड आउट कि पार्टीज के क्या मार्जिन रहे हैं एंड हाउ दे हैव ऑपरेटेड, और अकॉर्डिंगली वी कैन कंडक्ट द एक्सरसाइज. और one thing also OECD has prescribed ki if you have the data of the past year, then what you can do is through statistical methods, through regression analysis and through statistical calculations जो economy ने जिस तरह से operate कर रही है, then you can work out on the margins ki downturn economy या upturn economy में what will be the margins right now. So based on those statistical calculations also past year के comparables को use करके हम बीच में price determine कर सकते हैं. But practically I think that exercise would not be so much possible because those calculations required experts and professionals, so that may not be possible for everyone to do it. So in case of that I suggest कि या तो वो studies किसी professional से कराई जाए to get that data, or otherwise we can use the quarterly datas that are available because there are the requirement on listed companies to submit the data on the quarterly basis. So now we will go further and see ki how these factors that are required to take into consideration has been affected by COVID and how we can look for them. Because rule 10b sub rule 3 provides that reasonable accurate adjustment can be made if there is a material difference between the transaction under review and the transaction that has been compared. So if we can point out that because of COVID there has been differences between in these factors that are given, then there should be the adjustment to be made, or that should not be taken as a comparable. So the next section is impact of COVID on comparability factor. Like I said earlier that rule 10b2 provides these four criteria based on that should be considered for selection of an uncontrolled transaction. So one by one we would see that how these criteria has been affected by COVID. So first is that factors affecting characterization of a property or a service. So it can be affected by the nature of a product or a service. So in the normal circumstances, it may be we would have selected the products operating in the same industry as comparable. But now in COVID, the further investigation needs to be made. We need to revisit the comparables and have to see the nature of a product or a service also, because that may be impacted by a COVID. For say, if I take an example, like earlier I took an example of a caterer who is, one is one is operating one is supplying to the airline industry and one is supplying to another. So another example could be like if I say a person is a distributor and one distributor is selling the dental products, dental equipments, and another distributor is selling, let's say, the oximeters or COVID related products. So functionally we would say both are same, that both are the distributors and both are operating in medical equipment industry. And in non-COVID times, we would have broadly taken them as the comparables since they are operating in the same industry and have the similar functional profile, that they both are distributors and they both are not taking any major functions and just doing the reselling of the product. But now, can we take them as the comparable? Now, can we say that they are operating in the same economic situation? So, can anyone please answer that? See, I know this topic of transfer pricing involves a lot of practicality. So, if there would be an interaction, we would be able to understand it in a better way. Okay, so anyone like to answer that? Can we compare the trader of a dental equipment with the trader of, let's say, oximeter? Okay, so I would only answer them in such a situation that, of course, if we analyze the industry, if we analyze the demand, then we can say that the dental equipment dealer would not be having so much of sales as the distributor of the oximeters because of the huge demand of oximeters. So we need to make the investigation into the nature of the product or the services to determine the comparables, because it may have been changed by the impact of the COVID. And then it could be another impact could be on the nature of the consumer or the market, the market or the consumer that the comparable is serving or that the taxpayer is serving, that is under review. As I took the example of a caterer serving to airline industry or to another industry. Then mode of delivery, this could also impact the functionality of the comparables, because it may be possible that one comparables are operating in the same industry, but one comparable has opted for the online services and online supplying of the goods, while taxpayer has not opted for the online. So in such a case, the one who is giving the goods on online basis would of course have a better position than the one who is doing it physically only. So this would also have an impact on the margins and on the functionality and the risk profile. So this would also be the one factor that needs to be further analyzed. And then there could be other factors like government grants or government interaction. So like in construction industry, for let's say if I take an example that in one state the construction has been restricted by the government, while if I say in northeastern states the construction has not been restricted. So if we are taking the comparable of Delhi and one comparable is in northeastern states, so they may vary and then they may not be comparable because one is affected by the government restriction and cannot carry out the work, and while in northeastern state if we say that construction activities are not stopped, then then there is a smooth carrying out of the activities. So in this way, the comparables that were selected earlier or that were considered functionally similar needs to be revisited and reanalyzed for the transfer pricing exercise because of the COVID. And another feature that can affect the comparability analysis is FAR analysis impact on characterization. Because of COVID, it may be possible that the functions that are undertaken, assets that are employed, or risks that are assumed have changed. So that also needs to be analyzed, like what are the factors. There can be disruption in supply chain. As we know, it is as we know in COVID that it was not freely allowed to move, and the deliveries were not so smooth, and in between there was even a time when delivery was totally stopped. So while selection of the uncontrolled transaction, we have to see that how much of the disruption has affected that comparable, or due to COVID, whether the taxpayer or the comparable has shifted to the alternative mode of delivery in the absence of the regular deliveries that were available. Because in an international group, generally the functions and everything is defined by the proper planning, and proper thought is given for the functions. But COVID is such an exceptional and extraordinary event that it hasn't given time to many of the businesses to plan out the alternative modes or supply, or to reallocate their supply chains. And in such a case, the businesses have highly been affected by those. And in some cases, it may be possible that business have decided to shut down their operations completely, or they might have decided to go for the alternative source of supply, even if that is not so optimum as in the earlier mode. Or so that all those factors will have an additional cost on the taxpayer or on the comparables. So the delineation and investigation of those factors needs to be made. Now, I am saying again and again that this is required to be seen and that this is required to be investigated, but how we are going to do it, that is one practical problem, that how you are going to ascertain that. So I would say that businessman knows the best about it business. For the taxpayer, you can get all these informations by asking questions from the taxpayer itself, that why your cost of goods sold has increased. So you may come to know that the air freight has increased, and because of that the direct cost has increased. Or then the another is deep analyzation of annual reports. The annual reports contain lot of data about the impact that has been on the business due to COVID. So all those needs to be analyzed in detail to ascertain the effect of COVID on the cost on the supply chain, because of the supply chain that has been on them. And it can also be possible that due to non-supply of items, or due to disruption in supply chain, the person may have shifted its may have changed its contractual arrangements, like the contract manufacturer, they have, like the license manufacturer might say that considering my cost involved, I would recharacterize myself as a contract manufacturer. Or it may be it may be such a dynamic change that it may constitute as reorganization or restructuring. So all these changes we need to analyze and see that whether that change is just a temporary change, and whether that change is a long-term change, that it will have such a significant impact that the characterization of the entity itself may change. And if it is so, then that may constitute as a reorganization and restructuring. And in such a case, the proper return should be allocated, or price should be paid for restructuring. Then the another factor that can affect the FAR is extraordinary and non-recurring expenses. And these extraordinary and non-recurring expenses in COVID can be due to government guidelines, or it can be discretionary, adopted by the taxpayer on their own for the hygiene of their employees. So these expenses, like on hygiene, or since majority of the things are going online, so the expenses or infrastructure, all these things are need to be identified. And then we need to see that whether these extraordinary and non-recurring expenses are in the normal course of business, So while determining the profitability, we should consider them as a normal expense, or whether they are not in the normal course, but they are a one-time expense. So in such a case, whether they need the adjustment, like one office may have done the tele networking in its office so that the work from home can be done smoothly. Now, if that cost has been incurred just for an year, and that office has no intention of continuing it later on, so we can say that it's a one-time cost and that might need the adjustment. But if it is a regular feature that company is deciding to do, that on a long-term basis they will go more for a work from home basis, and this cost is on a regular basis, then it can be said that this is a in the normal course of business, and it is a regular cost, and this should be taken as an operating cost only. But this is not the only criteria. The another factor is that whether what are the products that one is selling, and whether this extra cost the entity is able to pass on to the consumer, or it is not able to pass on to the consumer. Like earlier I took the example of a dental equipment and a oximeter. So if I say in both the cases the entities are importing them, and the air freight cost or the logistic cost has increased due to COVID. So this is a extraordinary expense, that is the logistic cost that both are incurring. But in case of a oximeter, the entity could pass on that cost to its ultimate consumer because it is operating in a market, so that it can pass on the cost, while the dental equipment dealer may not be able to pass on a cost because it is not operating in that competitive market. So in such a case, there would be difference in the margins of both the companies, and then we need to identify that differences because of this increase in logistic cost, and one company is able to pass and one is not able to pass, then adjustment is required if comparability is drawn between these two entities. So these extraordinary and non-recurring expenses are very well laid out in the annual reports also, from which they could be identified, and we could ascertain how to, like in software industry, like software industry has done very good in the COVID. So it is a normal feature that the expenses for the medical treatment of the employees affected by COVID, or for the well-being of the employees, has been done. And in software industry in general, they have passed on this cost to the ultimate consumer because of the demand. So in such a case, that cost need not be adjusted, and comparability can be drawn by taking that cost as a normal cost. Another factor that could impact the FAR analysis is the risk allocation. And so here the OECD guidelines I have stated, they say that the COVID-19 pandemic, which constitutes a hazard risk, has led to unusual outcome of other risks for some taxpayers, including marketplace risks, as demand for some products and services has collapsed, operational risk as the pandemic has disrupted supply chain and inhibited production, and financial risk as borrowing costs for some industries have spiked and customers have delayed or defaulted on payments. So in particular, the widespread effect of COVID-19 pandemic in an industry or within an M&E group do not suffice to claim that a member of an M&E group has to bear the consequence of risk materializing as a result of COVID-19 pandemic without an analysis of how the outcome of economically significant risk controlled by the member of group has been affected by the pandemic. So in simple language, it says कि कोविड के कारण एक हैजार्ड रिस्क अराइज हो गई है, और ये जो हैजार्ड रिस्क है इट इज नॉट कंट्रोल्ड बाय एनीवन, लेकिन इस रिस्क के कारण और रिस्क अफेक्ट हो गई हैं, एंड जो अदर रिस्क जो कि बिजनेस एंटिटीज एज्यूम करती हैं, दे हैव आइदर इंक्रीज्ड और डिक्रीज्ड. तो इसके कारण जो रिस्क प्रोफाइल चेंज हुआ है, who would bear that change? That has to be determined from either the contractual arrangement, but contractual arrangement के अंदर भी अगर कुछ recharacterization हुआ है तो उसको हम ऐसे ही accept नहीं कर लेंगे. We need to see the position as a whole कि whether we should apply that recharacterization or risk reallocation or not. So I explain it with a simple example. Let's say there is a captive unit in India. So captive unit क्या होता है कि it works totally for its AE, or AE remunerate tax the captive unit based on the cost plus certain percentage of markup that is incurred by the Indian entity. And Indian entity does not bear any major risk and does not have other customers. It is working totally for the AE, और इस केस में AE उसको cost को एक fixed percentage के साथ reimburse कर देती है. Now due to COVID, let's say that the Indian entity did not get any work from its AE or was not able to work for the AE due to the restrictions that has been placed or other factors arising out of the COVID. So अब इस case में can the AE say that no, I will not compensate you on cost plus, I will not give you the markup that you are getting otherwise, but the Indian entity would say कि I am a no risk bearing entity and this COVID has applied, but you need to remunerate me on the cost that I have incurred because this is how our contractual arrangement is. Now in this case, the most important question arises is, can the low risk entities or no risk entities be disallowed the fixed returns, and can their margins be diminished or can they go into the losses? So this would not be a one answer, and this would depend, I think this would depend upon the industry to industry analysis and on different facts, and it would also depend upon the overall position, economic position of the group. Like OECD has also said, as I read the paragraph, that in particular the widespread effect of COVID-19 pandemic in an industry or within an MNE group do not suffice to claim that a member of an MNE group has to bear the consequence of risk materializing as a result of COVID-19 pandemic. So in general जो Indian entity है उसको आप contractual arrangement से ज़्यादा risk bear करने को नहीं बोल सकते. But then the guidelines say that without an analysis how the outcome of the economically significant risk controlled by the member of a group has been affected by the pandemic. So you need to do the analysis कि जो outcome है significant risk का, उसका क्या effect हुआ है group पे, means COVID के कारण पूरा group कैसे effect हुआ है. So in case there is no profit for the group as a whole, पूरे group में ही कोई काम नहीं है, so in such a case the low risk entity might be required to bear some loss and they might be required to diminish their margins. And if it is not so, the group is doing well and it has been impacted to some extent, then it may be possible that low risk entity might not agree for the lower return and might not agree for the risk reallocation. So this analysis needs to be made. For this, we can even understand it with one different perspective also. If I say there is an employee of a company, so employee, as I understand, is a risk-free person, or we can say it is a cost plus entity. He is required to the work that is allocated to him. He is responsible for the work that is allocated to him, and for that he gets the fixed salary. Now in COVID times, when the business of that entity of whom he is employee of has been affected, so the question is whether the salary of the employee can be cut down, whether we can say that no employee, we won't give you the salary. So in that case, there will not be clear-cut answer. there are many entities that have cut down the salary, and then there are many entities that have not cut down the salaries, and then there are entities that have even raised the salaries. So what has led to those decisions needs the revisiting, needs the analyzation, and after doing those analyzation, we can determine whether those reallocation is acceptable or not, and then we need to compare it with the industry, that what has happened generally in the industry, has this reallocation has been done, and accordingly determine the arm's length price. So how much of time I have? Okay.
There is sufficient time, Shweta ji.
Okay, Gupta ji. I think I have 45 minutes now.
Yes.
Okay.
And
So,
generally, there are not many questions, so you can continue up to 6 o'clock.
Okay, fine. Thank you, Gupta ji. And next factor that would affect the comparability analysis is the industries in which the taxpayer is operating or the comparable is operating. So here I have tried to put in the major sectors that how they have been impacted. The black color means that that industry has been adversely impacted. The white color means that that industry has been positively impacted, and mixed color means that there has been a mixed impact. So this would also be very important while doing the benchmarking exercise, because the businesses are the part of industry and they would be affected. They would the whole industry would be affected in the more or less the similar manner. And when we are then conducting the benchmark exercising, then we can take these factors into consideration, that there has been an adverse impact on industry or a positive impact on industry. And after documenting those reasons, after documenting those facts, it can be proved that the diminishing in the margins or the negative margins are not one thing that only taxpayer is facing, but it is a general trend in the industry and whole industry has been impacted. But the important point is this all needs to be documented. The importance of documentation has never been less, but now by COVID times, it has even increased more. As I say, मतलब in a lighter mode, if I take an example, let's see कि कभी अगर पेरेंट्स किसी बच्चे को डांटते हैं किसी बात के लिए कि नहीं तुमने ऐसा किया है, तो डेट जो वो बच्चे है वो नॉर्मली बोल सकते हैं कि नहीं मैंने ऐसा नहीं करा, आपको मुझ पे विश्वास नहीं है तो टीचर से पूछ लो, टीचर पे विश्वास नहीं है चलो मेरे फ्रेंड से पूछ लो, नेबर से पूछ लो. So what is this? This is general philosophy that what you are saying would be authenticated if another source is also saying the same thing. So you need to have that robust documentation to prove that the industry in which you are operating has been affected like this, and it is not only you. And by having those like cuttings or articles or reports that can be substantiated. So if we see the broad industries generally, so the economic impact on India is largely disruptive. There has majorly been downfall only, with the positive impact for e-commerce, for of course obvious reasons that in lockdown most of the things are going online only. Online education and then delivery of goods was also online. So of course e-commerce has got a boost. Then IT, ITS, software industry, engineering services. So this sector has of course received a lot of favor from COVID, and in fact many software companies have even increased their margin than the previous one. Then health and pharmaceutical industry has also been on a higher side only, and for this industry even major various government initiatives were also announced. And of course as we see, the situation was so bad that medical staff and frontline workers were the basic necessities at that time. And the construction sector has of course been impacted very badly because of lockdown. We know that most of the workers moved back to their villages, and also government put the restriction on construction in many of the sectors and many of the places. And then supply of material was also not so available easily for the construction. So the construction sector was of course devastated by the COVID. Then aviation sector of course has the very bad impact as flights cancelled. The sentiments of the people were negative. The travel industry and aviation industry, they both are interconnected also, and otherwise for businesses also mostly things were going online. So aviation industry has been very negative. And hospitality and tourism, I would say I have put it on black, but in first wave it was negatively impacted, but in second wave still it tried to recover from the previous ones, as when lockdown was lifted, the restaurants started and the life came to little normalized. But then again in third wave again it was very badly impacted. And manufacturing and trading industry is a mixed bag. Like it depends on the product that the that were being manufactured or traders. So in this case generally it also happened that most of the businesses shifted from their traditional product or from their regular product to COVID related products, so just to keep their businesses going and manufacturing plants operating. But when it was not possible, then of course the plants remained shut down for many of the times. And because of this like textile industry or the things that were earlier going good like auto parts industry, so there has been a major shutdowns, and so there has been a dip in that sector. And for trading also it depends upon the product that were being traded. Like I think apparel industry was very badly impacted as of course due to lockdowns and stay at home, work from home, the shopping has reduced a lot and malls were closed most of the times, while the those into hygiene products that has increased. So we need to, while doing the comparability analysis, we need to see along with other factors that the industry in which the taxpayer is operating, what has been the effect on that. And these reports can very well be obtained from annual reports of the similar players that are listed. They put down these impacts in their annual reports in very detail, and all that can be documented and meticulously laid out to prove that there has been a general downtrend in the industry, and that's why my margins has also been affected. The problem would be in the case where there has been an upturn in the industry in general and the taxpayer is into the losses, or taxpayers losses have dipped. So then that would require the deep analysis that what is different in the taxpayer, what functionality the taxpayer is performing, that when the whole industry is into the profit, the taxpayer is going in the other direction. But I think that would be practically, I don't think that would be in any case. But if it would be, then all interviews are required to be conducted from the taxpayer, and it need to be understood that what causes the losses to them. So these were the factors I discussed that could have the impact on the comparability analysis by the COVID, and that we need to identify. And most imperative thing is to document all effects of COVID on taxpayer and unrelated party. As we discussed in earlier slides, few of them, there can be many other, but that was just an outlook to give you an idea of how the factors could be affected. So OECD guidelines have given these 10 points that what has given these guidelines that how you can document what needs to be documented to prove uh, the impact of the COVID on the business. So first it says that analysis of how sales volumes have changed during the COVID, including whether the change is due to the use of other sales channel and specifically compared to sales generated in pre-COVID years. Means you can choose the budgeted data or the last year data. That the last year the sales was this much and this year the actual sales is this much. So this would be the analysis and how these sales volumes have changed. So for this you can provide the data that there is no demand in the industry, and you can even put that point through the budgeted data, like if there is some budget prepared, so what has been the variation from the actual and the budget to prove that there is the dip in the sales. Then another is an analysis of change in capacity utilization relevant for the M&E group and the control transaction or transaction with independent parties. Like we discussed earlier, that due to government intervention and otherwise due to dip in demands, also many manufacturing plants remain closed for the part of the years. And due to this fall in demand and government restriction, the capacity of the manufacturing plant was not fully utilized. So this can have the impact on the profitability of the entity, as there would be unabsorbed cost. So this needs to be documented that this was the capacity, this was the actual production, and what was the actual production in past years, to prove that my plant was not operating during the year, and because of that this much of extra cost I have to incur that was not getting absorbed. So this data can be useful for the taxpayer itself as well as for the comparables also. Then another third point is specific information relating to incremental or exceptional cost borne by the party. So this we have discussed earlier also, that due to COVID there can be certain incremental or exceptional cost, as the OECD guidelines also prescribed that on PPE, like personal protective equipments, entities would have incurred the cost. So this is the extra or exceptional cost due to COVID, or there can be extra logistic cost due to disruption in supply chain. So all these data of all these costs borne by the parties are also required to be meticulously laid out and identified. Or like there are things from the financials, the companies might be showing these costs as normally in their financials, because I think as per in the Indian accounting standard, the guidance that ICA has provided is that the extra cost that has been incurred due to COVID would be considered as the normal operating cost. So in financials, this cost might not be appearing separately in the financials, or maybe it may be appearing as an extraordinary cost, but that would affect the treatment of that cost for transfer pricing purpose. For transfer pricing purpose, we would consider that cost as incremental or exceptional, will depend upon the comparables, how they are dealing, and would also depend on it being in recurring in nature or one time in nature. And it also depend whether the entity has been able to pass it on or not, and then whether the entity to which we are comparing has been able to pass it on or not. But for doing that exercise, of course, we first need to identify it. So that documentation is necessary, that what those cost that has been incurred. And the next is the extent to which government assistance has been received, and if so, quantifying the effect and identifying the type of the assistance and its accounting treatment. So there has been many government assistance, like in many businesses, government provided the wage subsidy, and government also provide. I think I am aware of this program where government has provided the liberty for the COVID equipments to be manufactured, and also reduction in the rates on the imports on certain medical equipments that are relating to the COVID. So all those government assistance will have impact on the profitability, and so those all are required to be specifically identified. And then details regarding government interventions that have affect the pricing and performance. This is again like for certain things government might have let down the highest price, that the prices cannot be more than that, so those government interventions, or when government forcefully shut down the operations or the malls or the gyms, so all those government interventions. Then information from interim financial statements such as quarterly SEC filings, like the quarterly results can be used for getting the information that at this particular period of time how the industry was operating. So those can be ascertained from the quarterly financial statements, and those would be helpful for ex ante determination of transfer pricing, like in the real time, and not later on after the closing of the year. And one more thing that OECD has prescribed, not relating to documentation, but okay, I will come to it later on. Right now, let's first complete this documentation part. Seventh point says that macroeconomic information like country specific GDP or industry indicators. So this is for doing the statistical exercises. Like seventh and eighth point, I would say would go together for the analysis. Like if you don't have the contemporaneous data available for the comparables, then what can be done is based on the past year data of the comparables, the statistical methods such as regression analysis or variance analysis can be applied, and based on the inflation rate and GDP data of the industry, it can be determined that the margin that were expected to be earned by these comparables in the year that you are reviewing. But this of course has a practical limitation because it requires a professional to conduct those exercises, and all professionals might not be able to do it on their own. And then ninth point is a comparison of internal budget, forecasted budget relating to sales, cost, and profitability. So we can compare the budgets that were laid out and then the actual results to document the impact that has been by the COVID. And the 10th point is an analysis of the effects on profitability or the third party behavior observed in previous recession data available. As far I understand that COVID is the event of the century. Like there has never been a recession like this ever before. But if I think there was one in 2007, 2008, but not to the extent as it has been by COVID. But if there is some data of that past recession and how at that time the profitability has been impacted, that can well be documented and used for the benchmarking analysis. And okay, so this is regarding documentation. Now we will see the benchmarking. We have right now we have seen that what are the factors that could affect the comparability factors by COVID, and because of that, what could be the benchmarking issues. Although I have tried to discuss few of them while discussing the earlier parts. So let's see what are the benchmarking issues because of those comparability, because of the effect of COVID on those comparability factors. The problems that can arise is, one is there can be losses at gross level or at net level. And like I have started doing the transfer pricing exercises. We have started for the financial year 2021, and it is a very common feature in 2021 to have the losses by the businesses or the dip in the margin at gross level or at net level. So how we can benchmark them, for this I have tried to form one case study at the later part. So in detail we will discuss there, but here broadly what I could say is that documenting the factors that has affected the business, that has affected the industry, would be the great help to justify the losses at gross at net level on a subjective basis. And in numbers we need to make some adjustments that are particular to the COVID to justify these losses, and we will see few of them in later slides. And the second is selection of comparables, contemporaneous documentation, and multivariate analysis. So this we have discussed it. Comparables that were selected earlier needs to be revisited, as the broad comparability that was there in the previous years may not hold true for the COVID year. So it would depend upon the nature of the product that comparable is dealing with, or the nature of the industry that it is dealing with, to determine the comparability factors. So those needs to be revisited, and deep analysis, now the analysis deeper than that we have done in earlier years is required, and so that can be done from the annual report of the comparables by seeing that what were the major factors that affected them, and what are the industry in which it is operating, and then we can compare them as the comparable or not. So like I earlier took the example of like in a medical industry, a dental equipment cannot be compared with an oximeter. And similarly, let's say one is a manufacturer of a nylon cloth, and in a textile industry, and it has shifted to manufacturing of masks. So that was selected as a comparable in the earlier in the textile industry, but now due to change in the nature of the product that it is dealing with, it might not be a suitable comparable for the other taxpayers that are dealing in other textiles and whose plant has been shut off because of COVID. Then another problem is multiple year analysis, as Indian transfer pricing guidelines provide that comparability or the profitability has to be determined for the multiple year analysis. The data for the past 3 years has to be used to determine the arm's length margin, and the weighted average of 3 years has to be used for a particular comparable to determine the arm's length profit, to determine the arm's length profit of a comparable. So now the problem here would is that first of all the COVID year would have impact the sales of the businesses, and the sales would be less, and the profitability would accordingly be impacted. So if we will use the multiple year analysis based on the weighted average, then the year 2021 affected by COVID would have the less weightage as compared to the years that are previous to it, since the sales in the COVID year would be less and the profitability would also be less. So what could be the solution to this is, I suggest that tax authorities would give regard to this fact that COVID year is extraordinary and is not in the similar economic situation as the earlier years, and so exceptionally here the single year data that is specific to COVID year should be allowed rather than a multiple year analysis. And alternative to it, the another methodology that OECD guidelines has also prescribed is the use of the term profit method, where the profit for the 1 year is not benchmarked, but the profitability of the 3 years should be taken for the particular taxpayer, and then it should be compared with the profitability of 3 years for the comparable. The 1 year is the COVID year and the 2 years prior to that. and based on that the margin should be determined. So then the multiple year analysis may have a less impact. So this is one thing that I think practically I don't know how much revenue authorities would consider it, but OECD guidelines has prescribed that tax authorities should give regard to this fact and must allow such an analysis. Then the third is low margin or nil margin in limited risk bearing entities. So this as we discussed earlier also, that in case of low risk entities, can we say that they can bear the loss in the COVID situation? Like I took the example of a employer and an employee. So in case of a COVID time, can we say that we won't pay salary to an employee or we would pay nil salary to an employee? Similarly, in case of a contract manufacturer, captive units or limited risk bearing entities, can losses be transferred to them or they should be given the fixed return? So this needs to be analyzed based on the effect on the group, based on their future prospections, like what have their plans, and accordingly it should be accepted. Reclassification should be accepted and justified. Then another thing is, fourth point is classification of increased cost as operating and non-operating. So this I have already discussed in detail, that how increased cost should be identified and ascertained to be operating, non-operating, and that adjustment should be made for doing the benchmarking exercise depending upon the occurrence of it and the market, whether it's competitive and the cost can be passed on. And then one important thing too for this decision is that who is assuming the risk in respect of this incurrence of increased cost. So if this decision is taken at the group level by some central entity, and by that central entity has decided for all the entities in the group that COVID related protection cost should be implied in all the entities, then the person who is making the decision is controlling the risk, and ideally that should assume the cost relating to it. Then the financial arrangements, benchmarking could be a tricky, because in many cases you would see that there has been a waiver of interest on the ECB's loans that has been taken, or there has been dip in the rate, and whether that waiver, like if there is an Indian entity that has given loan to its foreign subsidiary and during the year it has not received any interest, or Indian entity has waived off the interest that is payable by the foreign subsidiary, so can we say it is at arm's length? So in such a situation, again the facts needs to be analyzed, and the position of the subsidiary needs to be seen, that how it has been impacted, what is its profitability, and whether it is in the position to pay the interest, and taking into fact all those factors, the Indian entity has decided to reduce or waive the interest, and then this arrangement should be compared with the industry trend, like has there been a similar waiving off by other uncontrolled parties in the same industry, and if try to find out the data for those, maybe through the annual reports or through the databases, that data can be extracted, and then based on that it can be proved that there has been a waiver. And the last one is the reallocation of FAR and reorganization and restructuring. So in COVID times, many groups might have decided that the functions need to be reallocated, like they might have shifted their manufacturing facility from one place to another considering the cost, or might have closed down the operations in some of the jurisdictions, or the person who was operating earlier to COVID as a full-fledged manufacturer might have opted to go for a contract manufacturing, considering the cost involved or the losses. So in such scenarios, it has to be ascertained that whether this reallocation of functions and risks among the group is just a short-term reorganization and only a transfer pricing policies needs to be amended for that, or whether it would amount to reorganization or restructuring of a business altogether. And in such a case, there should be, if it is determined to be reorganization or restructuring, because as per the definition of this, the diminishing in the business or closing down of a business also amounts to reorganization. So if this is so, then in such a case, it has to be ascertained that proper return has been given in those reorganization arrangements. And if there is any shutdown, then proper return has been given to the entity that has been closed based on the available intangibles functions that were there. Now, all these points that I have discussed, I have tried to take some practical figures to lay out that how we can analyze all these things, and how we can take a call and see that the benchmarking exercise should be conducted. So I have taken up the 3 industries for this, and the first one I have taken is a software industry. So software industry, as we all also know, that in general is on the upside, and for this I have taken the financial data of 3 listed companies to analyze it from the stock exchange site. And if we analyze this data, like the first one is just a minute. Is it visible, or I can even open the Excel sheet if it's not very clearly visible, because numbers are quite...
Preferably open the Excel file so that it is more clear, because font is too small. Yes, now it's better.
Okay. So the first company is a listed company, and this is a company that is into development of software for the banking industry. So if we see at the figures, that the revenue from operation in 2021 is 454.36 crore, while the revenue in 2020 was 444 crores. So there is a growth of revenue of 2.29%. And in the last column that shows the growth percentage, we can see that there has been a growth in almost everything, like the employee expenses have increased, and operating and other expenses have reduced. So it may be possible that due to work from home, and since it's a software industry, development industry, many things could be conducted from the remote places only, that the company is able to save the cost on its office functioning, like electricity and other operational expenses. So that's why the operating cost and other expenses have reduced down from the last year. And so when we were saying that there could be an additional or incremental cost due to COVID, the other side could be that there could also be the savings in the cost. So we should analyze the data in combined, like for the savings in the cost, that would of course have a positive impact on the profitability. And in regard to incremental cost and additional cost, the decision has to be taken whether that should go as operating or non-operating. But here the overall picture is that there has been a decrease in the cost, and to see if there has been any additional cost on the COVID, then further annual reports need to be analyzed to see if there has been any specific expenditure on that. And if we look at the profitability, so the profit after tax has increased by 9.61%. So here is the profit after tax that has increased by 9.61%. So in software industry, we can say that there is a uptrend in this company. Likewise, if we see the another company, in this case also the revenue has increased by 22%. And if we look at the employee benefit cost, that has of course increased. And if we come to the profitability, the profit has also increased from 32% to 35%. Although for transfer pricing purposes, we calculate the operating cost, operating profit, but just to get an idea, I am here referring to profit before tax or profit after tax. So here profit before exceptional item and tax has also increased. So by looking at this data, it can be drawn that in general the software industry was on uptrend, and then there is this third industry also, where also we can see that there has been the increase in the there has been the fall in the revenue. Like here, if you will say the revenue was 2034, while it has come down to 1646. So what could be the reason that when in general the software industry was in on the upside, the third entity is having the fall in the sales? So these things needs to be questioned, and these things needs to be answered by the business based on the industry analysis. And here I have highlighted the point G, which says that ability to service debt and other financing arrangements. The company did face difficulty during the period of April to June and availed interest moratorium during that period. However, subsequently the operations and the resultant cash flows have returned near normal and company has resumed interest payment. Hence, the company does not foresee any difficulty in serving its debt and interest obligation. So this gives an indication that during the initial period of the COVID, the company was having difficulty, and that's why only maybe it was not able to do the work properly, and that's why its revenue has dipped. So this is just an indication, but this indication needs to be further questioned from the business, and proper documentation needs to be made for this, for the fall in the revenue, when in general there has been a uptrend in the revenues in the software industry. And also in this case, if the service of debt, as the company is saying that it has not been able to pay interest, so if it is with the AE, then that also company needs to justify that why it was not able to pay the interest. And considering the Indian side, it is well good that the expenses its expense has been reduced because the company has not paid the interest. But had it been on the other side, then it needs the proper justification for waiving of the interest, and had been it the trend in the normal industry. So based on this analysis, the peculiar fact to software industry has come out that there has been a rise in the profitability. Like in company 1, the profitability has increased by 9.61%, and in company 2, it has increased by 3%. Based on this, if we are benchmarking a company that is into the development of software, then we need to revisit the arm's length range that has been determined in the past year, as that arm's length range might have gone up. So if the taxpayer is earning the same margin as in the previous year, then that analysis needs to be done for the year 2021. And based on the past year, it cannot be said that it is into the arm's length, because in general there is a uptrend in the software industry, and it may be possible that the arm's length range might have gone on a higher side. Another feature for the software industry that is generally the problem is in regarding the selection of the comparables, because software industry in the journal parlance consists of software developer as well as software product developer, and also the BPOs, KPOs, ITS providers. So one should be very cautious of selecting the comparables, as the person, as the entity who is into software development cannot be compared with the entity who is into the software product development. And similarly, KPO and BPOs are different than the software developers and IT providers or IT enabled service provider. And because of COVID, these all might have been impacted differently. So while selecting the comparables, it should be meticulously done, and in detailed analysis should be done to know the exact nature of the business, as some might be on the uptrend and some might be on the lower trend, and not doing the deep analysis may not give you the correct arms and price. Then another industry that I have taken is retail industry, and that I have selected is the apparels. There is a retailer or wholesale distributor of apparels. So here this is Excel sheet. There is one retailer, 7NR Retail Limited. In this case, you can see that here is the percentage change of sales, that the sales is dipped by 76.72% as compared to last year, and the gross profitability has, I will just open up the Excel sheet in this regard, because all the figures are not coming up there.
Okay, no issue.
G.
So is my screen is visible?
Yes, screen is visible, but please increase the font size.
Okay.
Font size now is 11, so you can increase it.
It is increasing.
No. At times it takes time, no.
I can zoom in also. It's better?
Yes. Now it's better. But particulars are not available here. Particulars are
Yeah,
not.
I am just there. Some. This is the
Okay.
sales. This costs.
Okay.
This is GP. This is GP from sales. Okay, I'm sorry for that. So if
No.
we will see at the first company, 7NR Retail Limited, there is a fall in the GP by 79.98% and also fall in the sales by 76.72%. And in this column I have calculated the percentage on sales. So if you will see, the COGS in year 21 is 97.69%, while the COGS in 2020 was 88.44%. So at the one side, the sales have reduced to the large extent. So we need to document the reason for this dip in sales, and if we would ask the business and if we would see the industry, it can the instances could be found that there has been a major dip in the demand of apparels, and the malls were closed, and of course people were not doing so much of shopping as in normal circumstances. So the apparel industry has a very low demand, and that's why sales have dipped. Then we need to inquire that when there has been a low sales, why there is an increase in COGS on the percentage of sales. So the possible reason could be either there is increase in the direct cost, or another reason could be that the margin at which the goods were sold was low. So this all needs to be answered and documented by knowing from the taxpayer. And one may say that since the apparel industry is in the nature that fashion changes very quickly, and when there is certain product of a particular fashion in a year, after 6 months or a year, that will not fetch the same price at the time it was launched. So because of that, the discounts were given, and due to this the sale price was less, and that's why the COGS is higher on the percentage of sales. Or it could be due to disruption in supply chain also, that the products or purchases were coming at a higher price, or logistics costs were high because there was no delivery was available so freely. So after asking all those questions and analyzing all those factors, we can very well take out the trend of the industry, and we could uh, take out the factors that are particular to the COVID and make the adjustments for them. And from the annual report, I have taken also out certain ratios for this company. Like the debtors turnover ratio has dipped from the past year. It is 1.47, while in earlier years it was 7.06. So it means that the entity is not receiving its sales on time, and there has been receivables outstanding for the entity. So this would have led to the cash crunch also, and because of this maybe it was not able to make the purchases, and it has made the sale of the old products only, and no new fresh products were performed, and that's why there is a dip in the sales. And since the products were sold on the discounted price, there is a fall in the GP also. So all this analysis and investigation based on ratios, based on numbers, would form the basis of benchmarking the transaction. Going to the next company, the Madhva Retail Ventures, here also we can say that there has been a major fall in the sale and major fall in the GP, and again the COGS have increased. So based on two companies, it is a general trend that cost of goods sold is increasing. So that the reason could be disruption in supply. And again, in this case also, the ratio of debtors turnover has increased. So there are receivables. So there is a cash crunch in the industry. So if we make out this grid and make out the retailers showing the similar trend, then if our taxpayer is also into the losses, then based on that, it could be justified that there was a downfall in the industry, and under uncontrolled transaction comparables also there is a dip in the GP and there is a fall in the revenue. And after further questioning, you can very well determine the reasons and document them. Like I know in apparel industry, there is one common feature of devaluing the inventory because of fashion getting obsolete and new things are coming up and discounts are being offered. And in COVID, that discounts might have been offered even higher than in normal circumstances. So because of this, there is a fall in GP, or because of that, the inventory was devalued, that has led to low profitability. So these are the few things that I have highlighted, and according to this approach, you can further analyze. Then the next comparables I have drawn, the later three are Vardhaman Textiles, Arvind Limited. So on further analysis of these annual reports, it was ascertained that these are into manufacturing and trading of textile fibers. So in this case, the third one is in fact into manufacturing of nylon cloth, and it shifted its manufacturing from the cloth to the masks. So Ideally, now after analyzing of this annual report, we can say that these are not functionally comparable to the retail industry. And here, if you will see, there has been increase in GP in these companies. So there is the trend that in case of a textile manufacturing, the GP has not fallen down, but in case of a apparel industry, the gross margin has been generally on the downside and various factors to it. So while selection of comparables, we should be very careful that these manufacturers should not be considered as a comparable, though they might be into manufacturing as well as into trading, but the profitability would show the different picture than the entities who are totally into the retail industry. Okay, this was the glimpse of the retail industry of apparels. And the third industry that I have, the third industry that I have taken is the auto parts manufacturer. So I will just zoom it. So here there is one company that is also a listed company, but luckily that is our client also, so I have not put in the name. But it is a licensed manufacturer of auto parts, and the transaction with its AER purchases and royalty during the year. So here, if we analyze the data, in this case, you will see that there has been a dip in the sales, but if you will see the gross profit margin ratio, that is on row number 19, the gross profit margin ratio has more or been less in both the years. The possible reason could be that it does not face the disruption of supply, or if it faces, because not facing is very unlikely, then it was able to pass on that increase in cost to its consumers. So the GP has not been impacted, but still if you will see the operating margin of the company, that is the at net level, that is reduced down by 246.91%. And in case of a manufacturing industry, the fall in the margin, the possible reason could be the shutting down of the manufacturing plants due to government regulations. So in this case, if the manufacturing plant has not been operative for the whole year, and that can be the reason for the fall in the sales also, and as well as the low operating margin, because the fixed cost would have remained unabsorbed. And if we want to justify these things, then if we go to other comparables like this licensed manufacturer of auto parts, Alicon Castor Oil, here if you will see the trend, then also there is a percentage dip in the sales by minus 14.53%, and again if you will see the GP margin, that is more or less the same. I will just freeze the cells. Yeah, so we were at Alicon Castrol. So again, if you will see the GP in both the year is more or less the same, and the cost of goods sold is also more or less the same. But there has again been the dip in the operating margin by 46.71%. And so there is a dip in the sales, there is a dip in the operating margin. So we need to check the capacity, whether it was operating on full capacity or it was not operating on full capacity, and that's why it has incurred the losses, or there were any other factors, like there has been some increased in the indirect cost, due to which there has been a loss at a net level. So all this needs to be ascertained from the annual report or from the taxpayer itself. Now to benchmark this XYZ Limited, if I came to know that there is underutilization of capacity, then I can make very well the adjustment for that, and that is even well accepted by the judiciary. But the problem would be that the adjustment has to be made in the case of comparables. Adjustment cannot be made in the taxpayer itself. So the data for that may or may not be available about the capacity of the comparables. So in that case, I think the better method would be to benchmark it by the GP margin. Since the GP margin of the company has not fallen down and it is more or less the same as in the past years, and in industry also the trend is that GP margin is remaining the same. So here, rather than applying TNMM, if the capacity adjustment could not be made, the better way is to justify the gross margins, then the net margin, and through this the purchase transaction from the AE can be benchmarked. But as regard the royalty, that would not get benchmarked. So the better methodology would be to apply the comparable uncontrolled price method on royalty and take out the rates at which this royalty has been paid and compare it with the rates at which the royalty has been paid by other comparables in a similar arrangement. There are softwares in which the rate at which royalty is paid is available. So these are the peculiarities that are faced by the manufacturers in COVID. And here I have also taken one company, Munjal Auto Industries. So if you see, this Munjal Auto Industries has a rise in the sales as compared to the last year, and also its profit has also increased as compared to the last year. So in the previous year that might have been taken as a comparable, but in current year if we see its numbers, then further analyzation is required that in general when there is a fall in sales and underutilization of capacity in the industry, how come this company is having an increase in the sales? So when I further analyzed the annual report, I came across this note that during financial year 2021, your company focused on optimizing investment and ensuring business opportunities. Then on the next para, all 4 units of the company located at Vagodia in Gujarat, Bawal as well as Dharuhera in Haryana and Haridwar are running well. So it may be possible that the manufacturing restriction was not put down in the areas in which this company has a manufacturing plant and it was operating on its full capacity during the year. And similarly, if I say Suprajit Engineering, it also, if you will analyze the number, it also has an increase in sales by 3.86%, and then its OP by sales has also increased by 4.11%. So you cannot just take it as a comparable on the face of it, because it is going otherwise the industry trend. So on analyzation, I have found that this company is into R&D also. The company's R&D has developed many specialized cables, speedometers, lamps, and other products for the customers. So this would of course not be functionally comparable to the our taxpayer, since our taxpayer is a licensed manufacturer and it does not own any IP, and it is paying royalty for the use of the IP, while this Suprajit Engineering is a full-fledged manufacturer that is conducting research as well as along with the manufacturing. So of course it's functionally different than the taxpayer and ideally should not be taken as a comparable. So this is the broad overview of the manufacturing industry's benchmarking.
I think we can rest it here and we can invite questions if any.
Yeah, sir. I am even through with my PPT. So this was the last slide. So.
Okay. So participants, if you have any questions, you can unmute yourself and ask the question. Okay, I think there are no questions. So We really thank you.
Either I presented too well or I presented too bad. That could be the reason for no question.
No, actually, it was very exhaustive. It was quite lucid, and I think participants got great insights. You very beautifully explained what are the benchmarking criteria for transfer pricing in case of various industries. You took examples from various industries, and you explained even by taking reports of listed companies that how things could be worked out. So we are really thankful to you for this wonderful deliberation, and over to RP Bhardwaj for concluding remarks, please.
Thank you, Shweta Garg ji. It was a wonderful deliberation.
Yes,
you
sir,
have done
you,
a very good job. Actually, this topic is not very near to most of the chartered accountants because most of us are not having assignment like this.
Yes, sir, I understand that TP is not a regular topic.
But a lot of things have been clarified.
Still, attendance was quite high this time.
A lot of things have been clarified by hearing your lecture, and we would like to hear you in future also. Thank you very much for sparing your valuable time. With the permission of all, I would like to formally end the meeting. If you have to announce anything else, we are also having a seminar tomorrow at the same time. It will be taken by Rano Jain, ex-ITAT member, and it will be on taxation of share transactions. Gupta ji, anything else?
No, it's all right. Thank you. Thank you very much. Thank you, Shweta ji, once again for this
Thank
wonderful
you,
deliberation.
thank you, Bhardwaj. Thank you, everyone, for being with me.
And
Now
I hope you will be sharing your presentation with us so that we can share it with the participants.
Yeah, I would mail it to you.
Okay, thank you.
Madam, there is a disclosure. We would like to upload this video recording of this lecture on the YouTube channel of the study circle, so that the members who have missed the bus, they can hear it and get benefit from it.
Okay, sir.
We would like to take your permission before uploading this recording of this lecture on our YouTube channel of the study circle.
Yes, sir, you can upload it.
Thank you very much. Thank you all once again, and now we are formally ending the meeting.